Hello and welcome to another update video about Render. Render hasn't really moved since the last video. That's also why there wasn't an update, because honestly, it has just moved sideways for the last few weeks. So just a zoomed out view first. Scenario hasn't really changed. I just added another alternative wave count and I have adjusted this support area for a deeper pullback. But the relevant support has been 171 that we kept an eye on, and where I highlighted to you, as long as we're holding that 171 level and it is currently being respected, one more high could occur in my opinion in this current wave count. However, is it reliable? In my opinion, not. It's not, in my opinion, a very attractive setup for higher. Not a typical 1-2 setup that we would be looking for in Elliott wave. And yeah, price has obviously already rallied significantly. You can see the exhaustion on the chart. You can see that here in May 23, price sort of broke out. That was actually in June, broke out of this ascending wedge to the downside. And these wedge patterns, these ascending wedges typically indicate exhaustion. Now, it hasn't really broken below a previous swing low, and that is the 171 level. But if we do that, I think then we can get quite quickly into this yellow support area that starts at 118. Now, I'm not looking at this as an impulse to the upside. It is only a diagonal pattern at best. I only show you bullish wave counts at the moment here because we have a potential 5-wave move up, either with one more high, to come, or those 5 waves are already in. Again, it's still not the most reliable one because it would only be a diagonal and not an impulse. However, we can work with it. Only really a break below 45 cents would make this, would make this coin basically worthless, because then it breaks below the lifetime 78.6 Fibonacci retracement level, and that is bearish. Okay, so where are we? So let's assume we get one more high. That is the white wave count. It is one that I still, consider very valid and also likely, but it needs to show us something. Now, as you can see, we're dancing on that 170 level roughly here, and that is the relevant level that I'm considering as very important for further continuation to the upside. But obviously, we broke out of the wedge pattern, right? We're forming a head and shoulders pattern and we can't really get off the ground. So just be aware that this could easily break, because we're just sitting on support. We're just dancing on support. If that happens, it's always a, let's call it, low risk trade when we talk about high reward, low risk, in terms of the ratio. Because, I mean, you could just set a stop below the last swing low, either here around 170, or you decide to leave it a bit more space and to look at these swing lows from May around 160. But the potential reward, I mean, this could take us to certainly above 292 if it works out. I think it's a pretty decent reward to risk ratio. It's just not the most reliable Elliott wave setup because we haven't got any confirmation that we have finished this correction to the downside, and we haven't got any confirmation that the C wave is already rolling. Now, actually, I want to make a change here. So the idea is that it could be that we get one more high here in this C wave of wave 5 of wave 1. It's a diagonal, so of course the wave 5 is an ABC structure. And the best way how I would think this could work is as an A, B, C. Alternatively, the B wave bottomed here, but I don't think so. So if this is supposed to work out, it would need to rally now, but it just doesn't show us any indication. So until we see anything, I can't confirm a low in place. In fact, we can see a head and shoulders pattern, which is potentially bearish, and I can see a potential descending triangle, which is also potentially bearish. But it eventually needs to break that 170, 171 level to confirm the breakdown. And in the alternative wave count, we already completed a wave 1 here in May, and we're already coming down in a wave 2. But it will take time because the wave 1 started in June 22. So to complete a wave, so yeah, the wave 1, it basically took the wave 1 a year. So the wave 2 will not complete in 2 months. Okay, it would be unlikely. Anything can happen, but it wouldn't be likely. So yeah, I'm currently watching the 170 level. That is really a make or break point for the wide wave count, in my opinion. Below that level, it could go down quite quickly here to this yellow support area, and it would need to be a larger ABC structure, which would unfold in the wave 2. But let's see first if we hold that support level or not. If we break it, then we can add a bit of a subwave count here to the correction. But yeah, at the moment, not really any motivation to go higher from here. That's my update about Render. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.